Hi there, welcome to the eCommerce Nurse Podcast, our 7th episode. I'm Corinne McLeod, ex-Amazonian consultant and founder of eCommerce Nurse and Vendor Society. Today we're going to be talking about international selling and the hidden costs when managing cross-border payments. We have a special guest, Aaron Rossi from Payoneer, a cross-border payments platform that empowers businesses, online sellers and freelancers to pay and get paid globally as easily as they do locally. Aaron has spent the last 6 years working within the financial services, focused on helping the thousands of small businesses taking advantage of platforms such as Amazon to create global businesses. As this opportunity has heightened, so has the need for specialized global banking and payment solutions for global SMEs, which is a segment typically underserved by the banks. At Payoneer, Aaron builds strategic partnerships which continues to improve the services they offer to this segment. So hi Aaron, a big thank you for taking the time to come on our show. And as the CEO of a business that trades globally, I'm really excited to learn how we could also be saving money.
Hi there, Karina. Thank you very much for having me, and thank you for the lovely warm welcome as well.
You are welcome. So let's jump straight in and talk about the hidden costs and how businesses could actually save on these cross-border payments. So with companies like Amazon, they're making it easier for businesses to sell internationally, and more businesses are trading at a global level. Now, whilst the sales potential is attractive, the cost involved when managing payments cross-border often can be missed, and not a lot of businesses know or realize that they're paying out a lot to the banks that they might not necessarily need to. So Aaron, it would be great if you could first talk to us about these different costs involved when it comes to handling payments at a global level, and then we'll go from there.
Yeah, sure. So I suppose when you think of let's say a global e-commerce business that's trading on Amazon internationally across their various marketplaces, I suppose there's maybe 2 or 3 main areas where they'll have to be making an international payment or receiving an international payment. So on the one side, you have when you have to deal with your banks in order to make a payment to your supplier, which is very often overseas, for example, based in China. So let's say a UK business dealing with their Chinese supplier, and they actually have to make the purchase in US dollars. So what happens here when you deal with the bank for an international payment is, firstly, they're probably going to try and charge you a payment fee of maybe 10, 20, 30 pounds. But secondly, and more importantly, they're going to give you an exchange rate. Now, most people, they kind of just accept the exchange rate as a thing you have to put up with for doing international trade. They don't ask questions. They don't look into it. However, foreign exchange is one of the biggest revenue generators for banks and for financial institutions. Now, every time that the bank gives you an exchange rate, they're actually building in their own markup into that exchange rate. So they take what's called the interbank rate or the mid-market rate, and that's basically the rate in which they can buy the currency at. And then they will very often build in a margin of up to 3, 4, 5, sometimes even 6%. Now, this is obviously 3, 4, 5, 6% off the entire payment. So you can imagine that this, along with a payment fee, can begin to add up. On the other side, is you're now trading internationally on Amazon. You're maybe receiving sales in euros and dollars, or maybe even Canadian dollars or Japanese yen or Australian dollars. Now, what will happen here is that most people, they'll start trading and they'll just have their home bank account, let's say for a UK business, their UK bank account as their chosen bank account to receive their international sales. In this instant, Amazon, they've actually built out their own currency service. So they call it Amazon Currency Converter for sellers, in which case they'll work with a number of banks to do that. Amazon will very happily send that money back to your UK bank account. However, when they do that, the same as what happens with the banks and every other financial institution, is they build in their own margin into that. And with Amazon, it's basically a very consistent 4% that they charge. For anyone that's trading on an Amazon platform outside of their own country and currency, and if you're using Amazon to convert your funds, this means that you will actually be losing 4% on your gross sales, which is obviously a quite a high fee to be losing. So that's where you can begin to see on either side whether you're making payments or receiving payments, that there's kind of these untransparent and hidden fees that can really eat away at your business.
And I mean, 4% is quite a significant amount for Amazon sellers. I mean, when already they're paying a referral fee of on average around 15%, and those that are selling fulfillment by Amazon, they've also got those additional fees, or even if they're not fulfillment by Amazon, they've of course got the fees of shipping the product to the customer. So that 4% is quite a lot, given that these days you need to be also investing in marketing, such as sponsored ads, and that is kind of is a cost. Definitely, we find when we're talking with sellers that is something that definitely goes missed.
Yeah, exactly, and the worrying thing about it is it's all, in many ways it's an invisible cost, because you've got your amount in euros and dollars, and they're just converting the funds. So you see your funds coming to your UK bank account in pounds, and you kind of just take that at face value. It's like, okay, that's how much my euros and dollars were worth. But in reality, it should be, you should be looking at an amount which is at least 1 or 2% higher than that.
And that's an interesting point, that it's almost like you accept that that's the way of doing business, because I know as a business, as I mentioned earlier, we trade globally. We receive payments in US dollars, we receive payments in Canadian dollars, Australian dollars, euros, and everything. And then the money comes into the, for example, a UK bank account, and you don't question that. It's almost like when you reconcile your accounts or you look at your invoices, you just assume that was just the cost that you had to pay. And you don't necessarily realize that there's all these costs that the bank is sort of making a good margin out of. Of course, they're going to make some money out of it, but you don't realize how much they're making out of it, because you're assuming that that's just the exchange rate.
Yeah, exactly. And the problem is, when it comes to the banks, that they, for their big corporate customers, they'll happily kind of work closely with them and offer them lower rates and personalized service and that type of thing. But unfortunately, it's the smaller businesses that they're not particularly bothered to offering that type of service for. So that's where the likes of Payoneer comes in.
And that's interesting that you say, the bigger businesses, I guess, that then can negotiate. But I guess the challenge here then is with the smaller businesses that aren't in a place to negotiate, and then really have to pay those fees. And I guess that then is that really, could it be seen that banks are taking advantages of those smaller businesses and individuals, in the sense that actually it's not very transparent, the cut that they're getting? Or is it transparent and it's just written in such a way that's kind of confusing to those making those transactions, that it just sort of businesses don't really sort of go into that small print?
So for many of the small businesses out there, it won't be transparent. It's the type of thing where you have to ask the question, but if you're not in a position where you have your own corporate account manager, then it's probably not even something that they'd be able to provide that transparency to. It's something which, if you know how to do it, you can work it out yourself, just to see what rate they are charging you, which is obviously quite likely to be high. But the reality is that that's something that only people who kind of work within foreign exchange knows how to do. It's not a skill or an exercise that's kind of ready available, or that the banks would offer to their small business customers. So there's been a lot of kind of publicity about this over the last few years, particularly with the rise of fintech companies coming to the fray, who a big part of their selling point is that, hey, we do offer you the transparency here. We're offering you a much lower, more competitive exchange rate. But by the way, you need to be aware that the banks here, they're charging you up to 5 or 6%. And I think things are changing a lot with regulations, etc. And there has been rumours that maybe in the next 2 or 3 years it is going to become more commonplace where the banks and the payment providers do have to actually provide that level of transparency.
Yeah, definitely. Because, I mean, it's definitely interesting for me, and it's still almost one of those, it's setting alarm bells off, as in making, I know an alarm bell went off for us, last year when we looked at our accounts and our accountant shared the amount of fees that we were paying, and the amount of money from just having a global business and just through exchange rates and everything. And that's definitely been a focus to reduce that, because we didn't realize how much we were actually losing.
Yeah, absolutely.
And so then, and with situations like, well, Brexit, we'll mention that. It's obviously made the pound sterling really volatile. It's up and down like a yo-yo. But also we see this with other currencies as well, that they're up and down. There might be stages where more currencies are volatile than others. Now, are you seeing that businesses are actually not having an account? Let's say we do a lot of business in the US, we then have an account with a company like yourselves, and we just have money sent into an account in the US, but we hold that money there, and don't send that money to the UK for a while because the exchange rate isn't that great. Are you seeing businesses do that, as in they're not actually, the cross-border payments aren't happening so frequently? People are actually trying to save in a certain currency and waiting?
Yeah, I think firstly, it depends on the business and whether whether they have the ability to hold those funds. A lot of businesses, particularly e-commerce businesses, a lot of them they need the cash. Cash flow is a big thing for them, so they need to get the money in and out. They need to pay their suppliers, etc. For those that can do it, it's a nice feature to have. Amazon, they're just going to convert your funds regardless of where the rate's at, and that's it. You're just going to have to take the hit. So having your funds dispersed in the local currency, whether it's euros and dollars, and just being able to hold it there for as long as possible, it at the very least gives you that control and that flexibility to have the option to, like you say, hold the funds there and maybe see if you can wait for a better rate. Particularly with things like Brexit, and when you maybe think within yourself that there's a good chance the rate might lower or increase, then yeah, it's definitely worth maybe giving it a try. But having said that, I don't think I wouldn't advise a small business owner to really kind of spend a lot of time trying to kind of beat the market with that respect, because that's in essence what you're doing. Is if you've made the decision, right, I'm going to hold the funds here because maybe the rate's going to go in my favor, then essentially in a way you're speculating with the FX markets. And the unfortunate thing is that the rate can actually go the other way as well, and it often does. And so you don't really want to be in a position where you're like, right, I'm going to hold it here because it might go down another 2 or 3%. That'd be nice to have the extra money, and then all of a sudden it goes up another 2 or 3%. You've lost that money. So I think it's nice to have the option, and it's also good to stay up to date with things like politics and other factors that might be affecting the rate, just to see if there might be a good time to keep some funds in at the time. But I think for the most part, it's best to kind of just run your business as you normally would, and try not to get bogged down too much with trying to see if the rate's going to go lower or higher.
Yeah, I guess then the key thing is, and the key thing of you working with payment companies is more about not sort of really playing with the exchange, but more about just reducing the cost to transfer that money from one currency to another.
Yeah, exactly. And a lot of that as well is just, and this is something that you can speak to Payoneer about when you get your account manager, is looking at your global payments, and figuring out how best to manage that money. So what I mean is, let's say you're a UK business, you're selling it on Amazon.com, collecting funds in dollars,
Mm-hmm.
and you've got to pay your suppliers in dollars. Then actually it's best to obviously collect those funds in dollars, hold the funds in dollars, and then pay out in dollars, rather than exchange the funds back to pounds and then again from pounds to dollars. Similarly, if you're actually only trading across the Eurozone, so you're collecting all your sales in euros, and again your suppliers are based in China, you've got to pay them in US dollars, then it still might be best to use those funds in euros to pay your suppliers in dollars, rather than making the payment from the UK, because then actually you're reducing the number of currency conversions you have to do, rather than getting the funds in euros, converting from euros to pounds, and then having to do a pounds to dollars transaction. It's best just to collect in euros and then pay out in dollars, if that makes sense.
Completely. And that's really an interesting point. That's a point actually I've never considered, is that, we just as a business ourselves, we receive payment in dollars, we make payment in US dollars as well, but it's all going back and forth from a US account to the UK account, the UK account back to a US account. And I guess there's those costs there. So it's a really interesting point to make, as in, it's almost don't necessarily need to do that. And I guess there's one question I want to take a few steps back, as I probably, for those that are completely new to these type of payment systems, it would be great to understand exactly how these payment systems work, as in having an account, for example, with Payoneer, all of that involved. So those that are listening will get a solid understanding really of the whole mechanics of it all.
Yeah, sure. So when you open up a Payoneer account, you will firstly be issued with 3 bank accounts, or 3 IBANs. So that would be a GBP IBAN based in the UK, a Euro IBAN based in Germany, which is effectively one for the entire of the Eurozone, and a USD one based in the US. So these, for all intents and purposes, are virtual local bank accounts for you to receive your sales directly from marketplaces or companies. You can then, if you need to, you can then open a number of other currency accounts based on, whether you're selling on a particular marketplace or if you have customers in that country. So you could do Japan, Australia, China, Mexico, and a few others there as well. But the core ones are obviously UK, Euro, and dollars. You then get once these accounts are open, you get your own unique details. So your account number, your IBAN, if it's in the US, you get your routing number, etc. This is in your business name. You can then provide those bank account details to, let's say, Amazon as the bank account for them to send the money to. Every time you then disperse funds from Amazon, they'll then go into the respective currency account that you've selected. And then from there, you have a few options for what you can do with your funds. You can withdraw the funds back to your own bank account, in which case you'll receive an exchange rate, which is at the very least 2% cheaper than what Amazon offer. But if you're doing much higher volumes, then you can negotiate a better rate. Trading across Europe and different European countries, you can use your funds to actually pay in the local currency for your VAT obligations to the tax authorities. And actually, you can do that completely for free. And then if you have suppliers that you want to pay from your balances, then you can just enter the beneficiary details of your suppliers, and then make payments to your suppliers from that balance as well.
Awesome. So basically, if you're a US company and then you're dealing with Amazon, let's say in the UK, instead of Amazon then paying you to your US account, they would be able to open up an account with yourselves. They would get account details from yourselves that they would then say for Amazon to pay into that account, and then they can log into that account with yourselves and then send that money back to the US or make payments and so forth.
Yes, exactly.
Great. And is there one thing, I know sometimes when I've spoken to a few businesses about that, is, because it's not necessarily that they've gone in and opened a bank account specific in the UK, and it's that panic of how legit is it to send money to another account, etc. How does it work for those that are listening that are thinking, oh, that sounds great, we can get a 2% saving, at least a 2% saving, sending money and opening up an account with a payments company like yourselves. But how, from a security point of view, how can you make those people feel secure that might be a bit nervous about that type of transfer?
Yeah, no, it's a good question. A couple of things. Firstly, the bank accounts that we offer, they're actually through our own banking partnerships. So Payoneer, actually, we're not banking ourselves. We're an e-money institution which can offer this banking solution through our banking partners in various countries. For example, in the UK, when we open you up with that UK bank account, that's actually held with Barclays. In the US, it's held with Bank of America. In Germany, it's held with Wirecard. So obviously, these are backed by some of the largest banks in the world. When it actually comes to the security of your own funds, because obviously you're dealing with Payoneer, a third-party company. So we're regulated in all of the countries that we deal with. So, for example, in the UK and Europe, we're regulated with the FCA. Sorry, the accounts that your funds get placed in are placed in what's called a segregated account. This actually means that your funds are completely separate to Payoneer funds and completely separate to Payoneer as a company. And if anything was to actually happen to Payoneer as a company, then your funds would be completely protected, and you'd just be able to withdraw those funds back to your own bank account.
Okay, that's great. That's good to know. So effectively, it's not necessarily an individual bank account they're sending the money to, but it is a segregated sort of account where funds are separate, and then they can decide if they then want to send that money to back to a certain country or make payments with that. Great, thank you for that, because it's good to understand the detail. And I know that there are also some other payment companies or payment providers. Everybody sort of always has PayPal in their mind, or TransferWise as well. How would you differentiate? There are all these different payment systems out there, and for those that there might be people listening thinking, well, I'm already using PayPal, or I'm using X, Y, and Z. Are there different systems that work better for different types of business out there?
Yeah, there's a lot of payments companies out there, and they all, well, a lot of them kind of do different things, and they fit different flows and user cases. And so, for example, PayPal, and they kind of cover a lot of different things, but PayPal is in essence, it's a wallet. It's a payment wallet, and it enables people to kind of send money to each other, or you can receive payments into your PayPal account from marketplaces or directly from your website if you deal with that. But PayPal doesn't really cross wires with Payoneer in any way, like a little bit, but not really. PayPal don't offer the bank account solution that Payoneer offers, and PayPal is a bit more for private individuals, and maybe, I guess they do a little bit in business, but they don't really deal with the kind of B2B payments and bank accounts that Payoneer deals with. TransferWise are more similar to Payoneer. However, most of their focus is actually on private individuals. A lot of you out there may have a TransferWise account. You may use it to send money overseas, or when you go on holiday, or to make a property purchase, that type of thing. They do have the business side of it, and they do serve business accounts, and it's fairly similar to the Payoneer offering. And then the difference here would be the way Payoneer have kind of come towards the market is it's very, very, very e-commerce focused. So Payoneer kind of did things a little bit different, and rather than just building a kind of a B2B payments platform that could be possibly used by any business, they actually decided to focus on particular segments and particular niches and then build solutions around them, just so we can actually do a few areas really, really good. So one of those areas is of course e-commerce. So you'll actually see a few differences as an online seller or a freelancer or an ad affiliate, these types of things. You will see those kind of added value areas where you will see that added expertise of Payoneer being e-commerce focused. So where we have our VAT payments platform, that's very unique to payments companies, and that's very much focused around the online seller being able to pay your suppliers for free in China to their Payoneer accounts. That's kind of built around the whole e-commerce part, being integrated with Xero and QuickBooks, our Amazon Capital Advance solution, being partnered with pretty much all of the global marketplaces directly. Not including Amazon, but you've obviously got all these other marketplaces such as Cdiscount and Walmart and Rakuten, and I mean there's dozens of them which a lot of people trade on. We actually work directly with these guys and we help with their mass payouts, and we partner with them. And as part of that, as a Payoneer customer, we kind of proactively try and help you grow your business and expand to these other marketplaces. Another thing is our compliance team is actually synced up with Amazon's compliance team, because they kind of have very stringent requirements when you're entering new bank account information in their system. So it's all synced up so that the Payoneer bank account statements will be accepted. So it's kind of just a lot of these things that come together for Payoneer, where we focus all of our investments and our resources and just kind of providing this really great service and really great payments and banking platform for the kind of e-commerce business.
Yeah, definitely. And I guess that, it's interesting. And I know from just being a user, for example, of another payment provider such as PayPal, that's worked, as you mentioned, sort of sending money to friends and family and across like that, or making small payments when shopping online. But I know from when we've had to send international payments, that is when the percentage is really quite high. And again, it's not so transparent when it comes down to what you're actually paying out until it comes into your bank account, and it is a lot less. So this is definitely a big call out for those listening, that there are all these hidden costs, and it's just really to, if you're sending money at an international level, is don't to just take face value and assume that's the cost of doing business. It's about understanding what those costs are, and and thinking about, okay, these costs are actually, you can actually save on these costs, and there are companies out there like yourselves that can help you do that. And that extra percentage can then be an extra percentage, like, for example, going into your pay-per-click marketing that's going to get you more sales, as opposed to losing it to the banks.
Yeah, absolutely. And when it comes to PayPal, it's, PayPal is a very good system to make it easier to make certain types of payments, either locally or overseas. Mm-hmm. But it's more kind of tailored to the smaller payments.
Yeah.
You'll often find that it might be easy to use PayPal when you're dealing with Chinese suppliers to when you need to pay for samples. Mm-hmm. But when it kind of becomes to that large payment to actually buy the stock, then you don't really want to be using PayPal, because the fees of 3.5%, they're just too expensive for that.
Yeah, exactly. And I know, so we've spoken a lot about how businesses, about these hidden costs that businesses aren't always aware of, or as we said, just sort of accept them, of when trading cross-border, and that they actually can make some savings. There's this other part where businesses, let's use Amazon sellers as an example, their focus is growing. They want growth, and so they invest a small amount, or it might be a big amount, in the business, and then that business starts to grow. But of course, when the business grows, it means that they need to get more inventory, they need more stock, and businesses need to invest more, which is hard when you're a small business, because you've already invested a lot in just starting that business up, and you need to keep investing more and more as the business grows. Now, Amazon have started to offer short-term loans to help these smaller businesses. But I also know when we've spoken in the past that Payoneer are working on capital advances for Amazon sellers as well. Is that right?
Yes, absolutely. That's our newest product. It was launched earlier in the year, firstly for USD. So when you're selling on Amazon.com, and then about two months ago we launched it for GBP. So now as a seller on Amazon.co.uk, you can now use the service to get an advance of your sales into your Payoneer account.
And so how does that work? Like, so I'm not too familiar actually with even the short-term loans that Amazon offers. So how does it exactly work? And is there what do businesses need to be considering if they do decide to get some cash advance?
Yeah, so I suppose that when you need cash, which a lot of these businesses do, either to when it comes to the busy period, maybe like Q4, when you need to make sure you have enough stock, or when you want to invest in new products, you want to expand to new markets. These are all reasons when you're going to need cash. So you have a few options out there, and you kind of have some. Obviously, you have banks, etc., and then you have some fintech companies such as iWalker and Funding Circle. So there's quite a few options out there, but it tends to be quite a long and painful process to actually get the money. So you have to do various credit checks, you have to send mountains of paperwork and bank statements, etc., just so that they can kind of look into your past and be able to make that decision that they're happy to give you the money. And when they do give you the money, it can be quite expensive. You can be losing up to 3 to 4% using these guys per month on the money that you're taking out. The Amazon loan is actually a really nice solution. It's a really good solution. The kind of rates they vary wildly to really competitive, so maybe not so competitive. But there's a couple of problems with the Amazon one. First being that it's invite only. So actually very few sellers seem to get invited to use it. The rumors are that Amazon's been having problems themselves with the solution, so they haven't been able to scale it up maybe as quickly as they wanted to. The second problem with it is Amazon, they specify in the contract that you have to use this money we're giving you to buy stock, which is in most cases fine, because maybe that's exactly what you want to do with the money. But if it isn't, maybe you want to invest in other parts of your business, then obviously that restricts things. And then there comes the kind of the guarantee side of it, and this is an issue with the banks and the fintechs like iWalker and Funding Circle as well, is that you have to offer some kind of guarantee, and actually with the likes of iWalker, you have to offer a personal guarantee, which as a director of a business isn't perhaps something that you want to be doing. With Amazon, if you're taking advantage of their FBA, warehouses and service, then they use your stock as collateral, which again isn't ideal. Like, of course, you're entering these contracts with every intention of paying them back, but if something was to go wrong, then it could really go wrong. So Payoneer's kind of looked at all of this and they've built out a solution of their own. And the way it works with us is you connect your Payoneer account to your Amazon account via the MWS token. Payoneer, we can now see all of the performance stats and data and past sales of your account. And actually, I suppose this is a very modern way of doing it, things like the performance stats, this is very, very useful data, and is actually enough data for us to make a decision on whether we kind of accept you onto the program. We've seen so far that we do actually accept the vast majority of sellers. It's very rare that we don't. We do require at the moment that you've been trading on Amazon for at least 1 year, but if you've been doing it for at least 1 year, then more often than not, then it's fine. Once that's done, you'll then immediately start receiving offers into your account, either via notification in your account or email. And these offers are usually worth around 1 month of your sales. So if you do 50 grand a month, then you get an offer for 50 grand. once, if you want to take that, you just click confirm, and then instantly the money comes into your Payoneer account. And then obviously you can then take advantage of the Payoneer solutions if you want to pay your suppliers, or simply if you just want to maybe pay your VAT bill, or just withdraw the funds back to your own account. Now, when it comes to the credit check, there is none. There's no lengthy applications, or we don't need to have a look into your credit or any of that type of stuff. So that's a huge thing. And when it comes to personal guarantee or any kind of guarantee, we don't do that either. So there's absolutely kind of no restrictions what you use your cash for, and there's no collateral used in any shape or form. And then when it comes down to the fee itself, right now we're running a promotional rate, but we only charge 2% on the entire amount of the capital advance, which is kind of super competitive.
Mm-hmm.
So this is likely to go up a little bit in the new year, but when it does go up, it's still going to kind of be very competitive compared to what the options are in the market. So yeah, it's basically, again, it goes back to where we build out solutions, but kind of specific solutions for specific use cases. And we've looked at the Amazon seller, and we've kind of been able to build a really nice capital advance solution for that type of business.
It's really interesting, and the fact that you actually integrate and actually, unlike other banks where they're looking at different types of metrics to see if you qualify for a loan, what's really important here is your account performing, and what are your sales levels? Because based on those sales levels, you can assume that ongoing growth, or those sales the following month. Is there a time period in terms of paying it back, and almost like an additional fee if it's not paid within that time period?
So the good thing about this is I think for both sides of the contract, is the way obviously Payoneer works is that you're using the Payoneer account to receive your sales. So the funds are actually coming into your Payoneer account. So the way you pay it back is very simply, once you've taken a capital advance, all of your disbursements after that, Payoneer take either 15 or 30% from that each time the funds come into your account.
Mm-hmm.
And we just do that until the advance has been paid off. But it usually on average takes about 2 to 3 months.
Okay, great. Okay, so it's a completely unique system in terms of the way it works, which is
and it's kind of very low touch, hands off.
Mm-hmm.
Once you've connected your account, you get the offers in, you click confirm, you get your money, and then that's it. Your money's just coming in to your Payoneer account as normal from your Amazon sales, and then once it's paid off, it's paid off.
Great. So those listening can learn, and especially if you're an Amazon seller, not only can you look at getting yourself a few percentage points back if you're dealing internationally by using a payment systems, but if you could even look into capital advancements as well, which is something that I know we work with a number of small clients, and that is definitely a challenge that they're confronted by, and especially, as you say, when you come towards Q4, where you need to invest in stock in advance for a peak period. So great. Well, thank you ever so much for sharing all this information. It's been really insightful and really great to see and hear about different solutions out there to help save money, but also help businesses continue to grow. Before signing off, I've just got one last question. If you were to give one tip to a seller that's just starting out to trade cross-border, what would that be?
I would, in terms of finances or anything?
In terms of probably more finances, but if you've got any other tips, by all means, please.
I'll stick to finances for now. I'd say just do a little bit of research and just make sure that you're aware of where the costs are when it comes to your finances, when it comes to foreign exchange. when it comes to international payments. Make sure you're aware, because if you're not, and it does seem to be something, when you're looking to start trading internationally, it's probably at the bottom of your list of things to do, because it's not a necessary thing for you to do in order to trade internationally. But I think just be aware that there are some very high costs out there, and a lot of it is very untransparent. And do a bit of research and speak to some specialist providers out there to see how they can help you. Great,
thank you. That's a great piece of advice, and definitely something we're going to be doing a lot more. And as I said, it's already got the alarm bells in my mind as to I think we're making some cost savings already, but there's definitely more that can be done. So thanks once again for coming on our show and sharing all this information and talking to us about different solutions available. Thank you also for being an amazing guest. And we hope to possibly have you on the show in the future to talk more about savings and finance.
Yeah, absolutely. And thank you so much for having me.
Thanks ever so much, Aaron. Have a good rest of the day or good evening.
You too. Bye-bye.